Guy, I usually would ask you about the market and what had happened, but I think we need to focus to start the show on gold. You've been talking about gold for a long time. Gold was up nearly $50 an ounce today, and I have absolutely no idea why. Maybe you do.
Well, I think you have an idea why, Brian. I mean, it's because people are looking at our Federal Reserve. Their balance sheet is just expanding at paces I don't think anybody could ever have imagined. I think people are realizing, you know what, gold wins in this environment. And this is not something we've been talking about for a week. This is something we've been talking about probably since last summer. So I think when the dust settles and, you saw that sell-off in gold over the last, 3 or 4 weeks, people said, the gold move is over. I think it's just getting started. So $50 today, Newmont Mining bouncing off sort of that 41, 42 level, the GDX, the GDXJ, all moving to the upside. If you're looking for something that wins in this environment, and again, we've been steadfast with this, it's gold and the mining stocks, Brian, at least in my opinion.
Joe, this is pretty amazing. The run that gold's been on, and coronavirus is just the latest catalyst for the buying. Will it stop anytime soon?
Market risk and uncertainty is a key factor when you look at the drivers of gold. Strategically, economic expansion and market risk and uncertainty are the long-term drivers of the price of gold. Our expectation is that on the long term, you're going to continue to face one of those two factors when you look at the gold price and its trajectory. You're going to have shorter tactical drivers as well, opportunity cost and also momentum. That's what we're feeling right now. 2 days of a down market, a day of market up in terms of the gold price. These are things that play on the short term and tactically. Longer term, what we're going to find is those market risks. So we have a crisis today, which is coronavirus. When that starts to settle down, don't forget, we've got an election year. We've got negative real rates in 90% of the developed markets. We've got geopolitical risks. We've got a China tariff deal that still needs dealing. We've got Brexit. These are all things that are out there that are going to continue to keep people thinking about what's on the risk horizon, what's the next risk for me to be concerned about.
Now, there's no doubt. I mean, first of all, you have an axe to grind. You're at the World Gold Council. We understand that. Take us through some of the risks that we have in the gold market right now. It's been a very staggering run. It can't keep going on that pace, though.
To be seen. As I've mentioned, everyone wants to know about gold when there are crises. So it becomes very popular and it becomes very much a topic for discussion around the coffee table, in our living rooms, and in the news. But what people need to really focus on are those key drivers of the gold market, demand and supply. When you think about demand, again, it is long-term driven by economic expansion. People get wealthy, they save money, they invest in consumables as well as safe haven assets, and they also worry about market risk and uncertainty, a long-term driver. So thinking about gold that way, those drivers, is key. And we've addressed this issue by rolling out a tool on our website, goldhub.org, which is called Quorum. And this is helping people to understand those drivers and how your factors that you use to determine your performance of a portfolio, your capital markets assumptions, will affect the demand behavior of gold long term.